This is the most effective scalping strategy that requires zero indicators. It's built on just 3 simple steps. And most importantly, this strategy works across crypto, Forex, indices, and stocks. And today, I'll show you real examples across different markets to prove that it works. Welcome to Graph Insight. If you find this topic useful, make sure to like the video and subscribe to the channel. Now let's get into the strategy. As I mentioned, this strategy has 3 steps. The first step is to define the trading range. This range will be used for trading throughout the day, and it's based on the first 4-hour candle of the day. Here is how to identify it correctly. Open TradingView and choose any asset you want to trade. In this example, I will use SUI. Switch to the 4-hour time frame and set the chart to the New York time zone. Since today is January 27th, this candle is the first fully formed candle of the day. Now mark its high and low and extend those levels until the end of the day. It is important that the candle is fully closed. If it is still forming, the trading range is invalid. Next step is move to the 5-minute time frame. Your goal here is to wait for price to break the upper or lower boundary of the trading range. The breakout must be valid. That means the candle must close outside the range. Wicks do not count. In this example, price moves down and breaks below the lower boundary, closing with a red candle. After that, we wait for price to return back inside the trading range. As you can see, price pulls back and closes a green candle inside the range. Now we move to the third step, the entry. We place the stop loss below the low of the most recent move. The take profit is set at 2 times the stop loss distance, giving us a 1-to-2 risk to reward ratio. And as you can see, price reaches the take profit exactly as expected. But this isn't the end. Price breaks above the upper boundary and then pulls back. A red candle closes back inside the range. This gives us another valid setup. We enter a short position. Stop loss is placed above the high of the most recent move. Take profit is set at 2 times the stop loss distance. Then price moves exactly as expected. The take profit is hit. Now, we see a breakout below the lower boundary. Price pulls back again, and then green candle closes back inside the range. This gives us a long opportunity. We enter a long position. And once again, price reaches the take profit. But the market isn't done yet. Price breaks above the upper boundary once more, and we enter another short position. Then price reaches the take profit once again. After that, price fails to form any new valid breakout for the rest of the trading day. At this point, using this strategy, we executed 4 successful trades in a single day. And the most important part, all of this was done by following just 3 simple rules. On its own, this strategy is already powerful. But if you combine it with other strategies, it becomes even more effective. Now let's move to the next trading day on the same market. Here, I've already marked the trading range based on the first 4-hour candle of the day. We can see that price initially breaks below the lower boundary, but this breakout happens with a wick. That does not count. We wait for a clean breakout where the candle closes beyond the level with its body, and that's exactly what happens here. Now we wait for price to return back into the range and confirm it with a green candle close. Once that happens, we move to the third step, the entry. We enter a long position. Stop loss is placed below the bottom of the previous price move. Take profit is set at 2 times the stop loss distance. And as you can see, price reaches the take profit. After that, price breaks the upper boundary of the trading range. On the very next candle, it closes back inside the range. We enter a short position, just like before. Later, price forms another breakout and returns back into the trading range once again. We enter a long position. This time, the trade gets stopped out. I want to be transparent with you. I show not only winning trades, but losing trades as well. No strategy has a 100% win rate. After that, price moves down and does not return to the trading range for the rest of the day. So even with 1 losing trade, out of 7 trades, we had 6 wins and only 1 losing trade. That gives us a total of 11 R, with a win rate of an incredible 92%. Now let's move to the Forex market and test this strategy there. I'm choosing the Euro to Australian dollar pair. The 4-hour time frame is already selected, and we switch the time zone to New York. Now, how do we identify the first candle on the Forex market? Since this is January 27th, this candle is considered the first fully formed candle of the day. We mark the high and low of our trading range and switch to the 5-minute time frame. Here we can see that price immediately breaks below the lower boundary of the trading range and then returns back inside on the next candle. We enter a long position as usual. Stop loss is placed below the lows. Take profit is set at 2 times the stop loss distance. And as you can see, price reaches the take profit. After that, price makes a strong breakout above the upper boundary and quickly returns back into the trading range. In this case, placing the stop loss above the most recent high does not make sense because of its size. So instead, we place the stop loss at the wick of the previous candle. Take profit is set at 2 times the stop loss distance, and this time, price hits our stop loss. But soon after, price forms a new breakout below the lower boundary. We enter a long position again. Stop loss is placed the same way, at the wick of the previous candle. Take profit is set at 2 times the stop loss distance, and then price reaches the take profit. After that, price breaks the lower boundary once more and does not return back into the trading range for the rest of the day. Now let's move to the next trading day. On this chart, the trading range is already marked. We can see that price breaks the lower boundary and unfortunately does not return back into the range throughout the entire day. So even though this Forex pair did not provide as many valid setups as the crypto market, we still managed to generate 3 EUR of profit from 3 trades over 2 days. That results in a 67% win rate, which is an excellent outcome. And lastly, let's see how this strategy performs on silver. On this chart, the trading range is already defined. We wait for a breakout, and soon price breaks below the lower boundary of the trading range. Now we wait for price to return back into the range. Once it does, we enter a long position. Stop loss is placed below the recent lows. Take profit is set at 2 times the stop loss distance. This time, price hits our stop loss. After that, price consolidates below the trading range for a long period of time. Eventually, price returns back into the range. We enter another long position. Placing the stop loss below the lows does not make sense here because of its size. So instead, we place the stop loss above the order block that formed here. Take profit is set at 2 times the stop loss distance, and then price reaches the take profit. After that, price breaks above the upper boundary and provides no more valid setups for the rest of the day. Now let's move on to the next trading day. The trading range is already marked again. We see price break below the lower boundary and then return back into the range. We enter a long position. Stop loss is placed below the lows. Take profit is set at 2 times the stop loss distance. Soon after, price reaches the take profit. Later, price breaks above the upper boundary and returns with a very large candle. In cases like this, when a single candle covers more than half of the trading range, it's better to stay out of the trade and wait for a cleaner setup. Shortly after, price breaks below the lower boundary again and returns back into the trading range. We enter another long position. Stop loss and take profit is set as usual, and then price reaches the take profit. Over these 2 trading days, we achieved the same results as in the previous market. A total profit of 3 EUR with a win rate of 67%. Of course, this is a short testing period and not enough for a full statistical evaluation. But you can always test this strategy yourself over longer periods and combine it with additional confluence to increase its effectiveness. Thank you for watching. I'll see you in the next video.